As usual, everyone is talking about the Fed right now. And you've probably heard people say things like there's a 70% chance that they cut rates, or the market's pricing in a 70% chance of a rate cut. But where do those numbers come from and what do they actually mean? Let's break it down. So, the percentage likelihood that you often hear people reference comes from what's being observed in the Fed funds futures market. Well, what is that? So, traders on Wall Street are really just like the people betting on sports in Vegas. Traders on Wall Street actually make bets as to what they think the Fed will do at future meetings, and they enter into contracts that basically outline and represent whatever their bet is. So, kind of like getting a betting ticket at a horse race. Now, when referring to these bets collectively as a group, we call it the Fed funds futures market, and based upon the bets we are seeing in the market, we can figure out what Wall Street thinks the odds of a rate cut or a rate hike at a future meeting is. Just like Vegas can figure out the odds of a certain football team winning a game. Similar concept. So when you hear someone say that there's now a 70% chance of a rate cut at the next meeting in December, what they're actually saying is just a derivative of market sentiment. This is what Wall Street thinks will happen. It's not something that the Fed is saying, so you can kind of think of it this way. If the interest rate market is the Super Bowl, right now Vegas is saying that team rate cuts has a 70% chance of winning. Now, if you want to monitor the probability for yourself, you can do this totally for free with the CME FedWatch Tool. I will put a link to it below.